today, the global reinsurance marketplace is under a fair amount of stress. Hurricane Ian is just one of those reasons for the stress, but 2022 comes on the heels of a number of record or near record years for catastrophe losses on a global scale. Again, not just isolated to the United States, significant losses in Europe, for instance, places like Australia as well. The reinsurance markets are stressed for other reasons. So they're stressed, yes, for capacity, but they are also stressed in the same way that primary insurers are stressed. They are seeing the cost of claims rise. So you would expect in this era of inflation in the United States and in fact around much of the world, we would tend to see inflated claim values, for instance. And so that means that after any given event, whether it's a major catastrophe or in fact whether it's a one-off event that triggers a loss on a facultative reinsurance policy, you're more likely to penetrate into the reinsurance. You're more likely to penetrate higher into a reinsurance tower than you were at any point in the past. And that's one dimension of the problem with inflation. But there are other dimensions as well. So for instance, what a reinsurer has been charging effectively, the rate on line index that was in effect for at the start of 2022 or back in 2021 doesn't really reflect the underlying loss cost trends, particularly that we're seeing in the form of severity in property and in casualty lines. So to some degree, reinsurance, just like the underlying primary insurance, you could argue is potentially somewhat underpriced. You add to this that beyond the reinsurers, we have the retrocessional market, which are essentially the insurers for the reinsurers. And that's how this risk is syndicated around the world. That market has been under some capacity issues, some constraints, some duress recently as well. So we have some capacity issues to deal with going forward in the reinsurance world. This is not the first time this has happened. And if history is any guide, what we will see is ultimately higher prices will attract more capital, both traditional capital as well as alternative capital in the form of insurance-linked securities.